Hi, today we're joined by Pinder. I'm going to let him introduce himself. Pinder?
I'm Pinder. I'm the MD of Falcon Insurance. Been running the business now, it was 19 years last week. So yeah, going on to 20 years. Been around the marketplace for quite a while. I started doing insurance when I was about 14 years old. After I got in trouble with the police, my dad dragged me into his mate's insurance office, and ever since then, I've never looked back.
Addicted to it.
Addicted to it, when you get one of those things, you think, I like this, I like doing this,
I'm going to help you out here.
Yeah.
Because I thought it'd be boring. But when I listened to you speak, there's a few things that stuck with me that investors, property owners, and all of that won't know and understand why. All right, so I'm going to fire some questions at you, which are going to be informative for them.
Go on.
Okay. Why sometimes is the reinstatement value higher than the value?
Market forces. Purely because of market forces, how well the market's buoyant, when the property was built, you don't have the problem, anything south of Watford, even sort of going up towards sort of Birmingham, when the market value of the property can way exceed the value of the rebuild costs.
Yeah.
It doesn't matter where you are in the country, you're going to go and buy a brick.
Yeah.
Do you know what I mean? Depending on what brick it is, a London standard, let's put it, a common, it's £1.
Yeah.
Yeah. Whether you buy it in London or whether you buy it, up north, a brick's £1.
Yeah.
Yeah. Things that are going to change is the cost of the labour. London's going to carry a heavier weight than up there. But where do you want to buy property? Everyone wants to buy it in London.
Also, there's things like which you have to take into access. Being able to rebuild it, you might have to shut the road. All different things like that.
Those are the sort of things they have adjustments on what you call it, those the rebuild costs. In London, John, especially if you're in one of the main sort of arteries, the rebuild cost goes up exponentially, John, because you've got to shut this road if this building comes down.
Yeah,
it's going to cost us a fortune. Do you know what I mean? Routing traffic in the middle of London.
It's all included.
It's all included, John. So all those sort of things are sort of taken into consideration, John. Where a lot of people are sort of asphyxiated, John, purely on the bricks and mortar of what's standing in the ground.
Yeah.
John, but the rebuild cost is calculated if something fell out of the sky.
Yeah.
Aeroplane, meteorite, whatever, falls out of the sky and demolishes that site. It has to include the cost of reinstatement of all the landscaping, the driveway, the walls, and then the mill building.
And back to in the condition.
In the condition it was in the first place. So you might buy a 3-bedroom semi-detached house, say in Slough, my old stomping ground, John, on one of the main arteries, it'll be 750, 800,000.
Yeah.
You know what I mean, for a decent sized one, yeah? Okay. Now you buy that same property, say further up north, Crewe, Bolton, whatever, you might pick it up. We put in an offer for one, John, 3-bedroom semi, £65,000.
Yeah.
Yeah. It's the same footprint. It's the same property. It's 3 bedrooms, semi-detached, decent sized house with a garage.
Yeah.
But that doesn't mean that property is going to cost £65,000 to reinstate.
No.
And this is where a lot of people just can't get their head around, John, the difference, the differential, between.
I understand it. It's just when people see it on their report, they say to me, well, why is that? Why is that? And the premiums for obviously a higher value reinstatement is not the value of the property, and they get.
Yeah, I mean, someone new. Yeah, I mean, new people coming in now have to accept it, John. Whereas, when you've got the older investors who have bought property years and years and years ago, it may be unencumbered now, John, but they've never bothered looking at the reinstatement costs, or they've bought it cash, John. Haven't used, your services.
Well, there's no need for that,
John. It happens. John. But that's where it gets, it gets messy.
Yeah.
And and then we're all of a sudden we're in the firing line. Well, why didn't you tell me? Well, we're not professional valuers.
Yeah.
We're insurance brokers, John. So that's not our job. You're the investor, and it's down for you to know what you're buying and what it's going to cost to reinstate. You can go to the FCA. You can make as many complaints as you want, and the FCA stance is, John, well, you bought the property. It's down to you to know. Yeah.
On another point, buy at auction or buy privately. When do you put the insurance in force?
Right, okay. Buying at auction, as soon as the hammer goes down. you're on for that. You're on for the property.
Mm-hmm.
You really should be insuring it as the gavel goes down.
Yep.
Yeah. You are then classed as the legal owner.
Yep.
Really, you should be putting the insurance in force at that point.
Yep.
Whether you manage to get through the 6 or 8 or 60 days or whatever it is, and you don't get the finance, then you're off the hook.
Yep.
Yeah. You've lost your deposit, but then you're off the hook. Then you can cancel your insurance.
Yep.
But in the meantime, John, I'm looking at that property's at risk. So if the owner of the property hasn't got cover or whatever, it burns down, you might have to buy a pile of ash.
Yep.
So and that's how it is, unfortunately. But on a private sale, John, as soon as you're exchanging, you should be then putting it in
Which
force.
is similar to what you're doing at auction. You're exchanging to complete within 28 days.
Within 28
Privately,
days.
you're exchanging to complete whenever solicitors can be bothered. But you're responsible from that date.
Yeah.
Yeah.
I mean, on completion date, John, that's usually when the cover goes in force. That's normal with private sales.
Yeah.
But auction sales, people think, oh, I don't own the property yet. Because I haven't paid. Well, you put your deposit down under auction conditions, do you know what I mean? Which is the law of the land. You own that. Bang,
So do you find a lot of people rush around last minute trying to get the cover?
A lot of people just don't realise.
Yeah.
Still don't realise they actually have to have cover. The sensible guys that have been, the seasoned, auction buyers, they know. Yeah,
Mm-hmm.
They might have a portfolio, so they'll get it automatically added. And then we get clients put through to us and saying, well, what do I need to insure it now for? What do I need to insure it for? And that's where you start getting, the through toing and throwing, and then they ring the auction house. When am I supposed to? Well, you own it now.
Yeah. I'm sure they can see over the film, but the passionate that you got about insurance. I said this earlier. I'm going to ask you a question on which I'll probably go for a cup of tea while you do the answer. Online billing, online insurance, direct line, and people like that. Why do they use an insurance broker? And what's the benefit and advantages?
Okay.
I told you I'd be off for.
It's quite simple, really, John. Online, you're self-executing. You've got no one to blame. Yep. Absolutely no one to blame. You can mess around with the figures and sums insured, etc., as much as you like. You get it down to a figure. I want to pay £300, but then you don't understand what you've just done, John. To get to £300. Yeah. Whereas if you speak to a professional insurance broker, and we'll just turn around and say, sorry, we're not going to play those sort of games.
No.
The professional guys will turn around and say, sorry, no, and walk away. The ones that just want to take your money will just take your money.
I can speak from personal experience that I had one of my previous properties, I had an insurance broker, and I paid a high premium. I thought, do you know what, I'm paying a high premium. Not right. I had a leak. It cost £96,000 to put right the leak, and the insurance company were brilliant. They asset loss adjuster, all of this, all instructed within days, covered everything, moving out everything. If I'd have got a policy online, I would have got none of that.
No, you won't get the hand holding.
No.
But by speaking to insurance brokers like us, you're we'll get involved with the claim.
Yeah.
We'll start chasing the insurance company for you. What's going on? Why is this taking so long? We'll chase those processes through. And you may not have done, all right, we're on camera, Joe. You may not have done everything perfectly right, yeah, but you want this claim to go through. But what pays our bills? You do.
Yeah.
As the client, you pay our bills because we earn commission off the policy that you've just arranged for us. Yeah. So it's in our best interest to try and help you try and get that claim over the line. Yeah.
Yeah.
Not breaking any rules or whatever. Sometimes it's just about how the claim is presented.
Yeah.
Yeah. If it's presented one way, John, you might get a simple no, or delayed. If you present it in a certain manner, John, you'll get the claim go through a little bit quicker, or hopefully a lot quicker.
Service.
Yeah?
That's what you
That's
pay
what it's
for.
down to service. Do you know what I mean? So that's why you have insurance brokers. You're you want to execute online?
Yeah.
You can't exactly ring them up because you're actually talking to the insurance company most of the time. Do you know what I say? Oh, what do I need to do? Do you want me to get this claim to go through? They're not going to say anything.
No.
They're going to say, well, it's down to you, John, what have you done? So, we see it on Facebook and everything else. Direct Line were rubbish, AXA are rubbish, RSA are rubbish, they're rubbish, they're rubbish, they're rubbish. It's because they've had a claim, they've had no one to consult.
It's not the insurance company.
It's not the insurance company, never.
No.
You know,
It's the person that took the policy and what they declared.
you know, you look at AXA's direct, which we call it, online portal, right? And the reviews for their claim service is absolutely horrendous. Yeah. However, we've got a huge account with AXA and we have no problems with our claims.
Yeah.
Absolutely none, because you're dealing with us. We're hand holding you through, do you know what I mean, rather than you dealing direct. And see, I always say, when loss adjusters come round, you know, they'll put their arm around you, they're your best mate, da 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 da. You end up telling them too much.
Oh yeah.
And you just shot yourself in the foot.
I know
John, like, no. And you just look, no, you just give them short, simple answers. Right, I don't know what to say. Let me come back to you on that one, John. Like, no, you know, speak to us first.
Yeah.
We'll tell you what to do. What
no,
you
no,
say.
I totally agree. Went through it, so I know. Yeah, yeah. In a good way, I must say, in a good way. That's why I advocate insurance brokers, not just because you're here. Right, a very specific point that I've heard you speak about, and it's very, very important to property owners. I think it was called the 50-50 rule, or if they underinsure it.
Yes, if they can go.
I'm not sure what term was, but you used the term that somebody, not only did it if it's underinsured on their claim, but going forward, what they can lose.
Yeah. Well, I mean, like, you know, if it's more than 50% underinsured, you're like, no, the insurers are well within their right not to pay altogether. Yeah.
So you've got a policy not worth anything.
Right. So you've got policy.
You paid for nothing.
You paid for nothing. Like, no, so you might as well
just to get your premium down.
Yeah. You know, so you might have just donated the money to charity, like, you know, rather than sort of like, you know, taking out the policy. Yeah. The insurers was to turn around and say, sorry, Mr. Customer, here's your money back. Goodbye, and they'll walk away. Yeah. So, you know, if you have £100,000 claim, you're 50% underinsured, like, you know, the insurance company won't pay you £100,000. They'll only pay you $50,000 because you're 50% underinsured. Yeah. Yeah. Regardless of how much your cover is, you might have £1 million worth of cover. But if that property is £2 million, you have £100,000 claim, you're 50% underinsured, they'll only pay 50%.
This is why I was, you know, a number of things which is in line with what I get asked when I send a valuation report to a client. Is, God, why is the reinstatement so much? Yeah. And I've got this amount of cover on my policy. And then when we say, well, that's great, but the lender wants you to insure it for, the valuation report says 490,000. So it's got to be insured for 490,000. They don't understand why. And it's a perfect explanation. And because the lender wants to know that they get all their money back if there is an issue.
If there's an issue.
So it's quite amazing that, yeah, you can cut all the corners you want, but you'll get caught out, and not only that, it'll cost you half the money. Yeah,
I mean, like, you know, people do as they want. Like, you know, they can come to our office and say, look, you know, well, I want to insure this building for 200,000. Yeah. We'll do it for 200,000 for you. Yeah. You know, we'll give you advice that maybe you should get it, you know, looked at, etc., etc. Like, you know, but you know, ultimately, we're not a quantity surveyor.
Yeah.
Yeah. You can use the online portal. This online portals, like the BCIS calculators, etc. For standard residential, they'll give you a rough, good valuation of what your property should be insured for. Do you know what I mean? Like, you know, when I did my house up, like, we did the extension and bits and pieces. Like, you know, previously we had it insured for around about 480,000, but we did £250,000 of works to it. You know, I got a lot done.
Insurance pays well then.
It does all right. It does all right. Like, you know, but when we finished, you know, like, you know, whilst I got lot of the works done cheap, do you know what I mean? Like, you know, because obviously connection through insurance, you know, I knew the builders merchants, they gave me the building materials at cost, etc., etc. When you worked it back, do you know, like, you know, when we had it then revalued, right, market value was X, but my rebuild cost has gone from 400,000 to now 900,000. Yeah. Even though I only spent 200,000 on doing the works. Yeah.
Well, you've explained why, and what so it all makes sense. But one of the things, so if a valuer goes around, a mortgage valuer, and he puts a figure on it, does he use the same source of calculation?
They do. They do. John, they'll use the BCIS, like, you know, or RICS valuate, like, you know, they put the floor plan, you know, area in, like, you know, and then say how big the garden, bits and pieces, and driveway, etc. They will give you a rough valuation. However, they're not experts. Yeah, they're mortgage valuers. They're not building reinstatement valuers. Like, no, there's always a disclaimer on their value. If you look at every report, and I bet you haven't looked at them, like,
no, look,
right, and there's always a disclaimer, John, we like, no, we suggest you get a professional valuation. Yeah, right, okay, because this is an indication only.
The only thing I can say on that, 90% of the reports I see, and then see the policies, all their policies are undervalued even to those values, let alone before they put it in the calculator. So, yeah.
Yeah, so we see it all the time, John. Like, about, I gave you the example that wedding hall that we insured in Wolverhampton, John. Like, even when the valuer looked at it, for the mortgage purposes, etc., and he put a value of about £6 million on it. Like, when I looked at it, I went, right, that's wrong.
Yeah.
Right. And he goes, what do you mean? He goes, it's too high. And I goes, no, it's not enough.
Yeah.
So, like, we need to get a professional value in. And I goes, look, all right, let's get the works done. Like, they spent, a load of dough on it. And when we got a professional quantity surveyor in, it came back just shy of 15 million quid. Grade 2, it's huge.
Yeah.
Huge.
Well, that's the thing that, again, grade 2, 1 and 2 listed buildings puts it up because you've got other people involved in putting it right and a lot more costs.
Yeah, special features, stone features, etc. John, like, and brick and stone make a big difference as well. John, like, you get the properties up north, a lot of them are built of stone. Yeah, like, so whereas stone was cheap back then, very cheap, it's bloody expensive now.
Yeah, of course, yeah, that makes sense. Yeah.
And then just to put that sort of stuff together, John, like, special craftsmen, John, like, they might have had special features of how the walls were built, like, they want to build it in line with
the
rest of the
Don't think of that. Yeah. So on the talking about property and people, starting out, they get a policy, they start building their portfolio. Is there a point where they go from individual policies to having, say, a block policy or whatever term you use, and they just add a property to the existing?
Yeah, as soon as you get your second or third.
Yeah.
It's like, 9 times out of 10, it should always work out cheaper.
Yeah.
And 2, it saves you a lot of time and hassle. Yeah. It avoids mistakes or, accidents, or mistakes happening. Like, the biggest one is usually, like, non-disclosure of claims.
Yeah.
Like, because, you think, have you had any claims? People instantly think, oh, have I had any claims on this property? No, they didn't ask you that question.
Yeah.
The question asked was, have you had any claims? Yeah. It didn't say on this property.
No.
Yeah. And when you got multiple properties, John, like, you may have just forgotten. John, you may have not done it on purpose. John, like, most people haven't. Yeah. They've had a property claim over here because they've got half a dozen properties, John, and they've forgotten to tell them. Like, and then they have a claim, and that's their route out. Sorry, Mr.
You do all the background work for them and everything.
Yeah.
See, I always think, rightly or wrongly, I'll probably get into trouble with them, but insurance companies want to sell you the policy, but don't want to pay out on it.
It is, sort of, a big perception, John.
Yeah.
Like,
No, that is the perception. So.
Right. No, that insurers don't want to pay.
Yeah.
Yeah. Well, I mean, they're in it to make money.
Yeah.
Yeah. Of course they are. Like, but they're there to obviously provide that service to cover you, John. Like,
But it goes back to what you said. If everything is declared correctly, they can't not pay out.
No.
Yeah.
No.
But it's knowing that you given that safety net and comfort as a business, because I'm not talking about their residential house. I'm talking about property investors that have got 2, 3, up to X amount of houses. They need the comfort that if something goes wrong, they're covered. And yes, it's a business cost. It's within their yearly budget, but they got peace of mind that if there's wrong, anything happens, they ring you.
100%.
Brilliant.
100%. Like, so, if they're buying multiple properties, stick it in a portfolio.
Yeah.
You're going to avoid mistakes. You're only dealing with your insurance once a year, rather than sort of multiple times over the year. I think the biggest one we put together was probably about 40 odd properties. And the guy was a builder, woman, they just carried on. He built houses, renovated them, told the wife to insure it. She didn't know.
No.
It's only because I met her husband. I've got these policies. I goes, show me. And he pulled out all these policies and I went, what are you doing? He goes,
and 40 renewals.
So I goes, well, he goes, you must be tearing your hair out. And he goes, yeah, it's hard work. And I goes, you can stick them on a single policy. He goes, no one's ever told us that.
Yeah.
No one's ever told us that. Yeah. And the reason why brokers don't tell you that, is they earn more money. Yeah.
Well, you said that, not me.
They're gonna charge you per policy a fee on every policy, like, and the rate's going to stay higher, like, but as soon as you start adding them on, then the multiples become better and better and better.
Okay.
Yeah. So it's better to stick it on a portfolio rather than sort of, think, oh, if I have a claim, John, they're going to charge me on the whole portfolio. Well, you're obliged to tell them about the claim anyway, whether they're single or individually insured anyway.
Yeah.
They're only going to rate that one property higher on the portfolio than the rest of the portfolio. Yeah. Because the insurance company's not stupid. They want to try and get as much money back as well. So that one property might be rated higher against the rest of the properties in the portfolio. So it's easy to just do that.
Brilliant. Yeah. Final question, because it's been good. A lot of information, which I'm glad for. What bit of advice would you give a property investor on insurance that we haven't covered off?
That we haven't covered off. Okay. The biggest mistake a lot of guys do, a lot of investors do, is get the tenancy types wrong. Yeah. Right. You could endlessly buy rent guarantee cover. You can buy this cover, that cover, but not getting, just your basics, your tenancies right. Not knowing how to sort of structure your insurance properly, to cover what you're doing. You could have put it out on rent to rent, which means you're now subletting it. Anything else, so there's a lot of stuff, that insurance, people they only know what they know.
Yeah.
Or the information that they've gleaned off the book of face. Do you know what I mean? Because some other muppet thinks he's an expert. Do you know what I mean? But, would you try and perform brain surgery? Do you know what I mean? Just because you watched a YouTube bloody video?
I know people that would. But
But you know what I mean.
I thought they were the best doctors.
But look, I'd say speak to a broker.
Yeah.
Unless you're fully 100% confident with knowing what you're doing with your policies, speak to a broker.
Okay.
And make the broker lead you. But don't take your first broker's word for it.
Yeah.
Get 2 or 3 quotes.
I don't often say this, but I'm going to give you a moment, because obviously the passion that you've got for insurance and the knowledge and the way you sell it. If they want to get in touch, how'd they get in touch with you?
They can find us on Instagram. They can find us on Facebook. They can find us on Twitter. Or just www.falconinsurance.co.uk, or look me up on Facebook, Pinder Dallywell. Don't look at what I post. Don't look at what I post.
Brilliant. Thanks for your time today. Right, that's the end of this one. Look out for future podcasts on all our social media outlets.